Why would you ever choose an FHA loan over a conventional loan? Today, I want to walk you through a few examples and ideas on situations where the FHA loan makes more sense than doing a conventional loan. My name's Miles Pitcher. I'm the owner of Superior Lending. I'm located in Utah. I do loans in Utah and Colorado. Let's jump into this today. So, first of all, FHA is not first-time home buyers only. It actually stands for the Federal Housing Administration. The crossover point that I generally see with FHA loans is if a client has a credit score 680 or below, it makes sense to do an FHA loan. Why 680? Well, in situations where we are looking at mortgage insurance on a conventional loan mortgage insurance is based on two things: your credit score and how much down payment you put down. The higher the credit score, the lower your PMI. The larger the down payment, the lower your PMI. Obviously, if you put down more than 20%, there is no PMI. But on FHA, the PMI rate is a flat rate. So regardless of how much down payment or where your credit score is at, the PMI rate is the same. And so that's a big deal. And usually that crossover point is where your credit scores dip below 680. Hope that makes sense. Another spot where FHA is super advantageous are those clients that are in the 500 to 580 credit score range. Now, normally FHA only requires 3.5% down payment. But when you get below the 580 mark, that is where you have to do 10% down, and then you have a chance of making it work. It's a tougher loan to get done, but it is a possibility. We have seen it happen, and we've been able to do those in the past. In this range, the underwriter is not necessarily following what we call an automated underwrite. They are doing what we call a manual underwrite, and that's what creates the 10% down requirement and also a little bit tighter on the guidelines and debt ratios when you're in that range. The other situation is sometimes I have clients that don't have credit scores. They've just operated with cash their whole lives. These people can do FHA loans. We call them credit invisibles. They can get an FHA loan. They are treated as though they have a 620 credit score because the lender doesn't know what their credit score actually would be. So another situation where FHA would be advantageous over conventional. FHA provides some of the greatest flexibility in debt ratios. So if you need to push your debt ratio higher to get into the home you want, FHA is a great way to go because many times we can go over 45% on there. And that's kind of where conventional stops, is at the 45% spot. Now, we call these derogatory events. That's your short sale, bankruptcy, foreclosure. I'll also add in deed in lieu of foreclosure. These are events that, with a conventional loan, have a much longer waiting period. With an FHA loan, for example, on a bankruptcy, Chapter 7, within 2 years after the discharge of the bankruptcy, you can do an FHA loan. So the waiting periods are much, much shorter. This is one of my favorite spots to do an FHA loan, is on a multi-unit property that will be owner occupied. This is pretty cool because if you're going to live in one of the units, you can get into this with 3.5% down payment, and the rate is still pretty awesome. Really cool product. Just please be aware that if you are doing a 3 or 4 unit property, a triplex or fourplex, there are some additional rules with that. We call it a self-sufficiency rule, which means that the rents off of the other 3 units, assuming you're occupying one of the units in the fourplex, the other 3 units' rents have to be sufficient or enough to cover the monthly payment on the property. So we've had a few people get hung up on that, but be aware of that. Also, if you're receiving gift funds for down payment from a family member, relative, if you are doing multi-unit, they are going to require 10% down rather than 3.5%. Here's one that I don't see happen often, but in most loans that you do, conventional or otherwise, you can get a gift from your realtor to help with your closing costs. But on FHA, if the realtor is related to you and they want to give you part of their commission, part of their commission towards your down payment, you can use that. It's a pretty cool thing. I don't see it happen often, but it's a great way for a realtor to help a relative with closing costs and or down payment. Let's take a look at rates now. Here's our update for today, April 20th. This is an inverse chart. As the chart moves down, rates move up. And we have been rates have been moving up on us for quite a while now. We're kind of used to it, but what's happening now is we know inflation is happening. There's not consensus among the Federal Reserve Board members on how aggressive they need to be about getting inflation under control. The market the interest rates are not liking the fact that they know the Federal Reserve is behind on getting the inflation under control. They would like them to be more aggressive in raising the Fed funds rate to get the inflation back under control. So that's why we continue to get a little bit worse in rates, is because of the Federal Reserve just being behind on getting that under control. Again, my name's Miles Pitcher. We love helping people with questions. I don't care where you're at in the country. We're happy to help you out with any questions you have, mortgage related. You can text me, email me, or hit my website and just let me know if we can help. Have a great week. We'll be back next week with another tip.